All right, what is up, traders? What's up, tycoons? Super excited for today's video. China's stock market is back at great financial crisis levels, right? This is the HSI right here. We've got the FXI also at the great financial crisis lows currently. K-Web looks really, really rough right now. BABA looks really, really rough right now. We'll break down some of the Chinese indexes, such as the HSI, FXI, and also K-Web. But then we're going to focus on Alibaba in particular. I know it's very popular right now at the moment, and I'll give you guys my thoughts and opinions on it on all of the charts. But there's some really important data and, just info that we need to go over about China. But of course, all the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. And if you're new to the channel, I started a completely free newsletter called Investment Intelligence, giving out free valuable finance content, trading content, and I even try to sprinkle in 1 to 2 free trade ideas a week. And this is what the trade ideas will look like, right? Highlighting the conditions on the chart, showing you guys the chart itself. This way you guys can see, what I'm using to identify what I'd like to call high quality setups. And maybe throughout the process of reading and learning through the newsletter, you guys can start to identify your own high quality setups. Now, you can go back to the website and review the newsletter. Remember, it's completely free. Check out some of the previous trade ideas, and you'll see that many of them have worked out very well. And because it's all about quality over quantity. So you don't have to worry about me spamming your inbox, 5, 10 times a day, and then, trying to brag about 1 or 2 stock plays that actually hit and actually work. All right. RTX was one of the recent ones from a couple newsletters ago, and RTX did very, very well. You can see people in the Discord, talking about it, mentioning it. And if you want to join the Discord, there's a link in the description. So in the Discord, you'll get access to all the different analysis, all my different trade ideas. So, in the newsletter, you can get about 1 to 2 a week for free. And then in the Discord, there's going to be over 20 plus swing trade ideas every single week. Oftentimes there's more than that, as well as intraday updates for day trade opportunities that I'm looking at, scalping opportunities, different things, as well as custom scripts, indicators, valuable resources such as being able to see gamma levels, dark pool levels for stocks, and different things like that. So if you want to join, there's a link in the description. You can sign up for that. It's $10 a month, less than a cup of coffee a week. And these are just some profits right here over the last week or two from the Discord, from various members and different screenshots. So love to see you in there. $10 a month is too much for you. Just sign up for the newsletter. Either way, I think you'll be happy with what you get. Now, let's talk about China. Okay, so the Chinese equity market share of world market cap continues to collapse. All right, it's roughly the same as it was 17 years ago, which is crazy. All right, so basically, just think of that, like 17, almost 2 decades worth has been evaporated, eviscerated, okay, from China and from the Chinese equity market. And if you take a look at the MSCI China Gross Index performance, all right, and this is since the index inception in 1992. All right. It's basically almost at 0% gains, right? This line right here is going to be 0%, the cumulative return, and it's basically at 0% right now. And it looks like it's creeping towards negative territory. I mean, nothing about this is really screaming bullish, right? And if you take a look, China stocks valuation slipped to the lowest in a decade due to the weak economy, geopolitical risks. Those are some of the key concerns amid a relentless fall. And it really has been a relentless fall, very brutal fall. And we take a look at some of these charts and you'll see that you know these things have been completely wiped out, right? And so this is looking at the forward PE ratio. This isn't necessarily the price, but a little bit more of the valuations based on a forward PE ratio. Now, funds tracking Chinese equities just absorbed the most trading volume in 2 years. So that's what we're looking at here on this chart. We see that investors heat up the trading for China ETFs. Now, volume, okay, doesn't always have to mean buying. Okay, there can be selling, high selling volume, different things like that. So it's not necessarily just a bullish signal, but when we have seen signals like this in the U.S. stock market, on SPY and different things like that, some of these signals, it did continue to be a bullish catalyst for the market, and we saw, the S&P 500 continue to climb afterwards. So, could this be a sign of capitulation, right? And what is capitulation? Well, that's when you see, that massive panic, that massive amount of volume on the sell side, right? And that's kind of like one big last sweep of the sell orders. And then we start to see a little bit of a rebound and start to put in a bottom shortly after capitulation. Maybe that's what we're seeing, right? Maybe that's what we're seeing. Maybe it's huge buy side activity and maybe it's huge buy volume. We don't know, right? But we just try to use a lot of this info to help, potentially give us an edge and look into things. Now, China's largest brokerage, CITIC Securities, has banned short selling for some clients. This has come as the Shanghai Composite Index is having its worst start to a year since 2016. China's stock market is down nearly 25% from its recent high and 5% year to date. China seems to be nearing a recession. And in notional terms, China, which had been net sold in 8 of the prior 10 weeks, was by far the most net bought market, led by long buys and short covers. Now, this is on January 27th, okay? And if we go back to this tweet right here, this was on January 25th. So when we talk about that volume right here, it does seem that it was buyers, right? Now, we don't have a way necessarily of fact checking all of these people, so you don't want to keep an open mind, and not just believe every single thing you read online or Twitter or FinTwit and different things like that. Um, but it seems like we could be getting that capitulation, or we could be trying to put in a bottom, but ultimately we'll have to see and let the future decide and tell us. If we look, right, this is the HSI, so this is the Hang Seng Index futures, right? This right here, this is 0809. This is the great financial crisis, and look at where we are. We're coming down to those previous lows. And we're not all the way there on the HSI, but I mean, when you take a look, guys, we've pretty much evaporated like almost 2 decades worth of gains, right? If we come back down to here, we can see that we're very, very close to these lows that we had during the great financial crisis, and all of the gains since then, for like 15 years have just been wiped off and completely gone. If we take a look at the FXI, so this is like the large cap China ETF, right? And we can see this one here is at the great financial crisis lows right now. That's exactly where it's at. Now, could this potentially be a little bit of a triple bottom? We'll have to see, right? But if we take a look, we see here, and then we see right here, the bulls are going to want this to be in, turn into a triple bottom. Could we see a little bit of a liquidity sweep before the move up where they kind of stop out a lot of people looking for that triple bottom? And then we start to see the rebound, so they get the liquidity they need for the move to the upside. That's something that you want to keep in mind as a possibility. KWeb, this is going to be basically, it's almost like the NASDAQ version in China. This is where a lot of your, tech internet stocks are going to be for China. And this thing looks pretty rough too. Now, we do have an inverse bump and run pattern forming here. So that is, it's one of my favorite chart patterns. I go over it a lot. It's powerful whenever you catch the confirmation and you catch the move. So for now, we have the prevailing downtrend, okay? And then we have the bump down in price right here, and a bump and run, typically would mean that we would break this trend line here and run up to the second trend line. And then in a perfect world scenario, you're going to break the second trend line and come up to where the pattern began. So if that perfect world scenario happens, then we could see the KWeb back at $30 to $32. But, we haven't even broken the trend line here. What's more important to me is that the blue line, this is going to be a 20 period simple moving average. So on the daily time frame, this is going to be your 20-day moving average. For us to have any chance of bullishness, we got to get above the 20-day moving average. Okay. And, once you do that, that's when we can potentially gain a little bit of momentum. You can see over here, when we get above, we come back down, and then we start a nice little rally holding that 20-day moving average. And as soon as we lose it, we start another downtrend. Here we break out, retest, and we're not able to hold, right? So maybe you want to see some type of a breakout above the 20-day moving average, a retest of it, okay? And if we can hold that and push higher, then you can use the 20-day moving average as a little bit of a stop loss, right? You can see over here, we break out, come back down and retest it, move back up, push up higher. And then all the other times when we break out, we're not able to hold it as support, breakout, not able to hold it as support. Here, we broke out, pushed up a little bit higher. And then the next time we tested it, weren't able to hold it as support. And so, just from a simple trend perspective, looking at the 20-day moving average is going to be something that can help you out, and, give you a little bit of a red light or green light as to whether or not maybe you want to be longing this. Many people have the habit of catching a falling knife. All right, and I do want to mention that we just filled this gap down right here. So these arrows, these highlight gaps on the chart. Now, all of the China stocks have massive gaps on them all over the place. I'll just highlight a couple real quick so you guys can see what I mean. But there's a gap over here. That gap filled very quickly, right? There was a gap over here. That gap filled pretty quickly. Gap right here. That gap filled pretty quickly. Gap over here. Gap filled pretty quickly. You get the story, right? And so what we have, we've got a gap down here to fill. Okay. We've got a gap down here to fill. We've got two gaps down left to fill. Now, why am I mentioning all of these gaps? It's because about 90% of the time, historically, gaps tend to fill. Okay, you tend to get that inventory correction, and those unfilled areas. Eventually, you start to see a fill about 90% of the time. Now, the big question is, when is a gap going to fill? As I showed you guys, sometimes they fill very quickly. Okay, and sometimes they take weeks, months, even years to fill. And with the current momentum and with the current sentiment, it wouldn't be a surprise to me if we were to fill some of these gaps. Remember, we just had one down here to fill, and we already filled it, right? We had this gap down here. One of the last times I was looking at K-Web, and you can see we ended up filling it right over here on that candlestick. So is it possible that the K-Web can continue dropping lower and head down to 20? Yes, that is a realistic expectation, but it doesn't mean that it has to, right? If we can actually gather a little bit of momentum and, potentially break this first trend line right here, this downtrend line right here, then we could see that inverse bump and run pattern play out. If we can get above that 20-day moving average, that'll be a good sign. So, these are some of the things that you want to look out for, in terms of like, are you potentially catching a falling knife? When there's gaps down to fill and it's still trading below the 20-day moving average, yeah, there's a possibility of that, right? But if we're trading above that 20-day moving average, then it's possible we can have a little bit of momentum. We'll see how long the momentum lasts, of course. It could be short-lived, as some of the times over here previously, or it could be a much larger time, such as over here, where it lasts a few months, 2, 3 months, right? Ultimately, price action is king, and we'll have to see what the price action tells us. Now, there's probably no better chart to illustrate the fact um, that differences in GDP growth have nothing to do with differences in equity returns. So from '03, China's nominal GDP is up 1,000%, and Japan's is only up 12%. But when you take a look at the returns, in dark blue, you have the Japanese index right here, okay? And then in lighter blue, you have the Hang Seng China Enterprises, and you can see the massive divergence in them. So Japan's GDP has only gone up 12%, but their stock market returns have massively outperformed China, and China's nominal GDP is up 1,000%. So, I just thought this was pretty interesting for you guys to look at. Now, there is something pretty important. China did announce, basically, that they plan to buy shares potentially, and they announced a plan. We'll see if they act on that plan. For now, it's just a plan. But Bloomberg reported that Chinese authorities were considering ordering state-owned enterprises to use money held in offshore accounts to buy shares worth as much as 2 trillion yuan. So that's about 282 billion. And they're basically going to put that into the stock market and pump up the stock market. But the most important line right here is offshore accounts. What does that mean necessarily, right? That's a question that people have. And it's most likely going to concur with selling U.S. treasuries. Now, China is not new to selling U.S. treasuries. They, have been one of the largest holders of U.S. treasuries and buyers of U.S. treasuries. But here recently, we've seen that that tone has shifted, right? And we won't get too political. There's you have the stuff going on with well, I can't remember that group, but remember the whole de-dollarization movement, right? And when everyone was saying that we're going on de-dollarization, the BRICS, I think it was, um, you know, and them really trying to get off the US dollar. Well, you've also seen them selling massive amounts of US stock and treasury bonds. So, these offshore accounts, most likely it's going to affect the US treasury market. Now, will it be something that can cause a massive sell-off in something like TLT? Maybe not necessarily, but it can have a little bit of influence in there. And it's something that people need to realize. So if they do this, all right, and this plan that they're considering goes into action, there's a very strong likelihood that they're going to be selling, large amounts of U.S. Treasuries, and that's going to flood the Treasury market even more. And we already don't have quantitative easing anymore, where we have the Fed coming in and buying up U.S. Treasuries. We've got quantitative tightening, the opposite, where they're rolling off Treasuries and not purchasing them. Okay. And then, we're basically missing our two biggest buyers in the Treasury market, which is China, and then Jerome Powell and the Fed. So, it could be a little bit of more headwinds for the U.S. Treasury market when we, kind of digest what it is happening, and, read a little bit between the lines in here in this, report about China and what it's going to do. And then, we're going to talk about Alibaba. Alibaba has earnings coming up very, very soon. There's been lots and lots of news about it, right? We can see here China equity funds see a weekly inflow of 12 billion. This is the second largest in history. All right. It came out right around when we had that news about China potentially, doing this 282 stimulus to the stock market. We see that insiders are buying Alibaba stock pre-earnings, indicating it may be undervalued. When we take a look at Baba even more, we see that there's 7 more days till Alibaba earnings. This was on January 31st. Analysts expect EPS of 267 and revenue of 36.7 billion. That's right, more than double the quarterly revenue of Nvidia. Now, I'm looking for the first time EBITDA positive in the international commerce, which might be a big game changer. And if you take a look at this right here, okay, so kind of just going on the comparison with Nvidia, Baba is the most undervalued stock in the world. And what they mean by that is from a valuation standpoint, okay, a PE standpoint, and then the price. If you take a look on this chart right here, the green bar, or I'm sorry, the orange bars right here are going to be, its valuations. Okay, and we see PE ratios, or you see how much their earnings are. Okay, and then you have Nvidia over here, and you see how much their earnings have skyrocketed here, and then the white line is the price of the earnings, and you can see that the price is following the earnings, the increase in earnings. Meanwhile, Baba's price is continuing to go lower while earnings are just getting better. This is a little bit of a better chart of it for you guys, but the stock follows the earnings, but sometimes it does get lost. So you see over here, we've had these periods before where earnings go up, and this is around 2016 time period where earnings are going higher, but Baba stock is continuing to go down. And then you see a massive rebound in the price, and you get a recovery in the price action here. And then it started to follow earnings again. Earnings was going down. All right, and what we've seen is earnings are skyrocketing here, but Baba's price is still not following, very similar to this time period here in 2016. So, it's always risky investing into China. All right, there's no surprise about that. And you guys should know about those risks. But it's really interesting, and it's setting up for potentially a really amazing trade if we see something like we did over here back in 2016, where we see that, hey, earnings were going up, but the price continued to go down. And then 2 years afterwards, it had a massive, massive bull run. So, that's one thing you can potentially look at as a possibility, that, Baba is, undervalued and is not trading at a current ratio, or a correct ratio relative to its earnings. And it could be a little bit of an arbitrage play. And this leads us up to think that, hey, China could run really hard. Baba could run really hard. It could see a 6 month, 1 year, 2 year rally. But we just don't know when it's going to start, right? It's showing signs of potentially trying to bottom, just like it put in a double bottom over here. It's very close to a double bottom now. Of course, you've got to break the neckline of your double bottom for the confirmation, but we'll see. Right now, I was kind of really debating playing Baba for earnings, and just getting a little bit of some YOLO call options on it and see what happened. But this news from SoftBank is, keeping me away a little bit now. I blew it up a little bit, this tweet, right here, but I'm just going to read it from this side. So they announced that they have settled all the prepaid forward contracts on their Baba shares, but beware though, because brokers involved in those contracts likely still carry a good chunk of Baba risk in their books. And it's important to monitor the chunky sell volumes here to understand when they will be done offloading. At that point, subject to market conditions, I'll consider building a position myself on the name. I don't have the guy who made this tweet, but it's not my tweet. SoftBank also promised they will stop messing around with Baba stock in connection with the settlement of the intragroup transactions. Neither SBG, Skybridge, nor the financial institutions have bought or sold any new Alibaba shares in the market, nor do they plan to do so in the future. So, it's still a little bit risky, all right? And it's kind of got me debating, what if we start to see some of these big chunks of these big chunky sell volumes on the earnings? That's a really good excuse to dump a chunky amount of the stock right there, especially after these contracts have been settled. So, maybe I won't go as heavy on Baba earnings. Maybe I'll just play a little bit. I haven't bought anything yet on Baba. So we'll see. Ultimately, it's pretty risky, pretty much a gamble anytime you play earnings. So I always consider that. Did we do pretty good with SoFi and Amazon so far this year? Really wish I got Meta. I'm sure everybody wishes they got Meta. Meta pulled an Nvidia. That was really great to see. Happy for all the people that made a lot of money on that. Now let's go into some technical analysis. And the last time I did a chart or did a video on Baba, I explained a simple concept to you guys, right? Now, there are three stages to a reversal, right? You have the downtrend, then you have box consolidation, and then you have the reversal. You have the uptrend. And so what do we see? Well, we see that Baba was trading in this bearish channel. That was our downtrend. We're in box consolidation right now. We've been consolidating in this box sideways movement for about 2 years now. And if we were to break out to the upside, basically get above 125 right here, that could potentially start the reversal phase. Now, 125 is very far from the current price. So that's a huge move already if Baba was just to simply get to 125. But when you zoom out on the macro charts for these, for some of these names like Baba, you can see that there's a lot of potential. Now, all of these boxes right here, these are gaps. Remember, I was talking to you guys about gaps in the beginning. Okay, there's tons and tons of gaps up on all of these China stocks. And, it's very possible we can see some of these gaps fill, but it most likely won't be anytime soon in the future, maybe years down the line. All right, but first thing first is we need to get step 3, which is going to be breaking out of the box consolidation. And in a perfect world scenario, what you'd look for was a breakout and then a retest of that 125 area. And if we can hold the top of the range and push higher, that's going to be a good sign that we're starting phase 3 of the 3-step reversal. If we look at our weekly MACD, it is trying to curl right here at the moment. It's curling, and if it can get that bullish crossover on the MACD, that'll be a very nice signal potentially that Baba could start to rally a little bit. Now, when we zoom in on the daily time frame, we've been monitoring this triangle pattern here in the Discord for a while and mentioning to people, hey, just simply wait for the breakout to the upside or wait for the breakout to the downside, because we had a gap down here to 67. And so that's what I was trying to tell a lot of people about, whenever they were in Baba. And you can see it actually came down, perfectly filled that gap, and then gapped up afterwards. All right, so now there's another gap down to fill, this time at 70. We'll see if it pulls back and fills this gap down to 70 before earnings, or we'll see if earnings can potentially skyrocket it up to fill some of these gaps up here in the 80s, in the 90s, or even in the right around 115. So I'm pretty excited. It's definitely been a roller coaster. Remember what I said about that 20-day moving average? If we take a look, Baba has broken out and is retesting its 20-day moving average right here. So if we can hold and continue some upward momentum here, that's going to be very nice from a technical analysis standpoint. But binary events such as earnings, they're always going to void out technical analysis. It can absolutely skyrocket. It can plummet down. So always keep that in mind. Even if technicals look good heading into earnings, it doesn't necessarily mean that it's going to follow those technicals based on a binary event such as earnings. So is there risk? Yes. Can Baba head down to $60, $57? Yes, it's possible. At that point, you would be looking for a potential double bottom, or some type of reversal candlestick, such as this bottoming tail that we had over here. All right. At the moment, We're just looking to see, what can happen, right? We came down, we filled that gap at 67. We've traded Baba a couple times in this time period here, a couple, day trades and swing trades. So it's not something that's not tradable, but when you talk about long-term investing, or, a very long-term swing trade, you just have to be aware of a lot of the risks. There is lots of upside potential if things go the right way, but that doesn't mean that it's something that you can just go all in on and expect to have a smooth sailing, clean, not bumpy ride. So that's going to wrap up my China video. I've been wanting to cover China a little bit for you guys, but there's been so much really good data that I've needed to share with you guys on the stock market, especially like the one that I just dropped in my latest video, talking about how 2024 is going to be a blockbuster year for stocks. So I definitely think you guys need to watch that video and check that one out. Don't forget to join the Discord. Remember, that's where you get all my different analysis, all my different trade ideas. If you take a look at one of the Discord only swing trade ideas, we had DraftKings talking about the falling wedge on the daily time frame back in January 13th. And you can see afterwards, it ended up rallying over 20% in a very short time period, about 1 or 2 weeks. So that was a really amazing trade there. Plenty of amazing trades in the Discord. Remember, you guys can join now using the link in the description. It's $10 a month. And if you don't want to sign up for the Discord, sign up for the newsletter. That's completely free. You'll get about 1, maybe 2 swing trade ideas a week, as well as just, valuable finance trading content and different things like that. You can get that completely for free. And if you ever enjoy the analysis and you want to, book a coaching session with me, or do a little one-on-one session with me, you can do that via my Ko-Fi page. I do 30-minute and 1-hour sessions. You just click on the commissions tab here. They also have this little buy a coffee button, and it's basically a way to leave a tip or donation for the free valuable content I do put out there for you guys. Appreciate you watching the video, and I will see you in the next one.